Good morning, all. In today's session, we are going to learn about money laundering. Money laundering is a financial crime. So, we are learning about uh, how money laundering is happening, what are the financial crimes, what are the stages in money laundering, what are the techniques used in money laundering. So, these are our topics of discussion for today. So, let's start. First of all, right from the beginning of a customer relation, we are starting with the possibilities of financial crime. When a customer is entering into the premises of a bank, there is we have to be vigilant as a banker or as a compliance officer or AML manager or MLR. There are possibilities of financial crimes. So let's consider an example. If a narcotic smuggler or narcotics dealer is coming to a branch, his requirement will be to make the money he earned through the selling of drugs legitimate. That will be his requirement. He will be having huge piles of cash. He will be having might be $1 million, and he wants to make that $1 million a white money. So how can he do that? By depositing the same in the by depositing that those money in the banking channel. Through that way, he can make his money legitimate. So the first financial crime discussed here is money laundering, and that is what I told, the possibility or the way through which we can make illicit funds legitimate is called money laundering. There are many ways in which uh, illicit funds are gained by a particular person. It can be through the selling of drugs, it can be through human trafficking, it can be through human smuggling. So there are many ways. So those crimes which are the source of the illicit funds are called predicate crimes. We will study in detail about that later. First of all, what is a financial crime? As I told earlier, right from the beginning of a customer relation, there is a possibility of financial crime to happen. So that should make us vigilant. So that's first thing. Second thing is fraud. If the in the as I told in the earlier example, if the narcotics dealer or a drug dealer who earned illicit funds through selling of drugs uh, wants to put his money into the bank account, but our laws and our rules are not permitting us to deposit $1 million cash right into the account. As per the CTR, we can only deposit $10,000 at one time. So any money beyond that we cannot deposit. As a banker, we cannot deposit. But that time, the person, the drug dealer, or the one who wants to, or the criminal, or the one who wants to launder his money, is using pressure tactics. He might request us that give me some ideas, please help me, some to make this money white. I can give you whatever you want. So what happens if the particular employee side was sitting in right in front of him might be having some financial issues? He might have invested his money into share markets and lost huge amount of money, or he is going to online gaming and online gambling and he lost his lot of money. So at that time he is getting this offer. He will be interested and he will collude with the person and help him to make his money legitimate or white. That is called fraud, colluding with a potential money launderer by an employee to commit a financial crime. So this is an example of fraud. There are many other elements of fraud, but this is one example. The colluding for deceitful practices to gain financial advantage. What is the employee getting? He is getting money of the 1 million. He might be offered uh, $10,000. So that is a huge help for him. He might have gained some. He have gained a financial advantage and helped the launderer to launder money. So that is the fraud. So first two types of financial crime we have learned, and the third one is tax evasion. Denying the government the legitimate income is tax evasion. As we know, there are limits for income reporting. Because tax evasion can uh, tax evasion such, if I am earning an income of every year I am earning $2 million as my income, and I am supposed to give a share of my income to the government, but I am reporting my income as only $10,000 per year, and I am hiding my source of income, and I am not transferring, or I am not using my accounts to transfer income. Such cases, tax evasion is happening, and that is another financial crime. Tax evasion is it's a larger, it's a very, governments are getting denied a huge amount of money by different source of different persons. So different, the sources of income are not reported properly, so that is tax evasion. And last one is sanctions evasion. The example, as we are now discussing, what is happening, that drug dealer is have his name is there in the UN sanction list. His name might be ABC, and that name is in the UN sanction list. And while he is there to he might be there to open an account, or he might be there to continue his transaction. In that case, as a prudent banker, we are supposed to check whether his name is there in the OFAC list by US or UN sanction list or EU sanction list. If his name is there, and then we are permitting him to do transaction, that is sanction evasion. So this is just a basic example. There are a lot of other sanction evasions, because as we all know, the war is going on. What is the reason for this war? The reason is told that Iran was using weapons of mass destruction. That's nuclear weapons of mass destruction. They were using their uranium enrichment program for creation of nuclear weapons. That was the allegation by US and Israel, and they attacked Iran. What before that, for years, Iran was under the OFAC sanction, Office of Foreign Assets and Control sanction of the US. So the Iran's economy has been crippled by the sanctions imposed by US. Iran was not able to do transactions in US dollars with any other countries. So that is called sanctions. So that is one form of sanction imposed by one country over another country. So in the example of the drug dealer, I have told about the sanction imposed by UN or EU, that blacklist a particular customer if he is doing terrorist financing, or if he is into some other money laundering. So that is called sanctions evasion. So we are helping a particular customer to evade the sanctions. Last one is bribery and corruption. The payment, we are if we are into construction of a house, so we needed the permit from a particular government department. So if we go to the government department, ask him for that, kindly give me this paper so that I can start my construction, the engineer or the government officer may not give the permit permit at the time, or nearby. He might inform us that I have got a lot of works, I need at least 1 month. Right, that during that time, if you offer him some payment, he might expedite the process and guide, and might give the permit at that moment, or within an hour or within a day. So that is called bribery. That is, we can haste, we can make we can get the outputs at a faster pace by giving some money. So these are the forms of financial crime, that some forms of the financial crime which are actively which are active, and which can um, which are some of the active financial crime as per the CAMPS guide. So let's delve into details. Let's first discuss about the money laundering. So I have already told what is money laundering. That there is a for every money laundering there will be a predicate crime. The predicate crime is the source where the money for the money laundering is generated. So, human trafficking, human smuggling, environmental crimes, forgery, piracy, drug dealing. All these are examples of predicate crimes. These are the primary crimes which gives the illicit funds to a money launderer. So these funds are then integrated with the integrated with the economy through financial institutions. So let's see the proper definition. The process of cleaning. We are cleaning an illicit fund. Concealing, we are hiding the source of the fund. And disguising, that what is disguising, we are changing the shape. So in first go, that it is in indirect cash, we can make it a money in the account through disguising. So cleaning, concealing, and disguising the existence, source, movement, destination. So what is this? So these are the, so I think you're getting the detail. So cleaning means we are the illicit funds are cleaned. Concealing, yes, concealing means if the particular money is derived from a that illegal activity, we are concealing the activity, source of the activity, and disguising the fund, disguising the existence, source, movement, destination, or illegal application of criminally derived property or funds to make them appear legitimate. So that's it. So definition is that we will see more examples and we just make a clear idea about the same. So second point is criminal activities that lead to money laundering are also referred to as predicate crimes. So predicate crimes are the primary crimes which force us to do the money laundering. So examples of predicate crimes include arms sales, narcotics trafficking, contraband smuggling, embezzlement, insider trading, bribery, and fraud schemes. Okay. So when we discuss about the money laundering stages, we will get more idea about the definition which we discussed earlier. Okay, what are the three stages? There might be more stages, but we can define in every definitions there are three stages of money laundering. So in money laundering can be defined and can be divided into three stages. First one is placement. Okay, what is placement? We are placing the illicit funds into the financial system for the first time. So how can we place the amount? uh, we can sell drugs and we can get money, but for placing that we need some sort of skills, and money launderers skillfully do this through different techniques. So first one is structuring, microstructuring, and smurfing. Okay, as I told you earlier, the our our hero is the drug dealer. So we are discussing that example right from the beginning. So as I told you earlier, this drug dealer has come to our branch. So we are learning the placement portion, how placement is done in a money laundering. So the drug dealer has come to our branch and he has asked the teller or the cash officer that, sir, I need to deposit $1 million. The officer has responded him or her that, sir, it is not possible, we cannot help you for that. Then what happens? Then he has got $1 million in cash and he needs to deposit it into financial some banks. So what is the need for depositing the money? He need to purchase a brand new car. When he approached the car company, they told that we need a cash in white, we need fund transfer through a proper bank. So he needs to somehow deposit the money, but he don't know what to do because the bank is not allowing him to do so. So he left the bank. Just came out of the bank and he thought, what I can do. So he devised a method that since I cannot deposit more than $10,000, I will deposit, I will open bank accounts in five different banks and I deposit $10,000 for some time. So each day I will deposit $10,000 and I will deposit as much as I can. So that way he opened several accounts. Several accounts means four to five accounts. Five accounts he opened, and he deposited $50,000 in first day. After 3 days, he deposited the same. Like that, for 4 to 5 times he did. So 5 into 50. So he deposited 250, 100, 250, 100. That's $0.25 million in five different times over a period of 2 weeks. But that does not suffice because he need to deposit nearly $1 million, because his money he's having that much money and the car is costing the same also. But he thought, how can I do? So this way he deposited the money under the CTR limit, that is cash transaction limit. So that's, he made $0.250 million. He made it as a legitimate fund. So this way of depositing money under the limit or threshold and making it legitimate is called structuring. So large illicit funds are split into small transactions to avoid triggering AML reporting thresholds. So this is called structuring. So in microstructuring, we are reducing the limit of the transaction is more less transaction. So that is called microstructuring. So, but what the problem? The problem is that he cannot deposit $1 million. This way he needs to buy the car within 2 months. And if he's doing this way, even though the CTR limit is the deposit is below the CTR limit, this won't do his purpose. So what he decided, he asked 5 more persons that kindly help me open an account for me, so that I can deposit accounts, and lastly I can transfer all this money into my account and then to the car dealer's account. So he asked 5 persons, and those persons also and came to helped him, and they all opened 5 accounts, and they all opened accounts in different banks, and money was credited to their accounts also. This is called smurfing. Smurfing means criminals use multiple accounts, so that different persons accounts are opened, and smurfs, these persons are called smurfs. The same is in money mules also. What is money mule? The same is in money mule account also. The persons, different persons are forced to start open accounts, and transactions are run through their accounts for layering and placement. So these two things can be done using the Smurfs accounts. Smurfs are the persons who are uh, forced to open accounts for doing money laundering. So through structuring and smurfing, he was able to convert his $1 million cash he earned through drug selling to he made those amount legitimate money through structuring and smurfing. This is called structuring, smurfing. So large illicit funds, we can split the large illicit funds into small transactions and avoid AML reporting threshold. So what, so first point is placement. We learned how to place money. This is one technique of placing money, that using structuring, smurfing and money mule accounts to deposit money into legitimate bank accounts. So placement is the stage where illicit funds are entering the financial system for the first time. Second is layering. So what is layering? So in the previous example, if the drug dealer is depositing money only to his account, he is only dealing with his own account. So what happens? He does not have any other accounts. He has structured the money through his account, and he's through several deposits. If he's using only his account, it is easy to find out that the source of income is his account only through suspicious activity reporting. That if the particular customer's account is having a credits of more than 1 million account in 1 year, it means that in the annual information report sent by that particular bank will reflect his account, and that will be pointed and then sent to the financial intelligence unit. So there is a chance of finding that this particular person itself is doing the money laundering. So in order to avoid that, in the second stage, what is happening is that layering is happening, where a complex set of transactions happen, that innumerable transactions, that from one particular account to another account, then to another account. For that, it's smurfing helps for that, because several accounts are already open. So in a matter of seconds, the money which is invested or which is deposited in a particular account gets transferred to a lot of other accounts. That is called layering. In digital asset laundering, this can be happened through mixing and tumbling. When the crypto assets are used for money laundering, this crypto, this bitcoins, or any other decentralized financial crypto assets gets transferred through multiple unhosted wallets. So I will tell you in details about unhosted, what are unhosted wallets, and CAs, crypto asset service providers, later. So what happens in the crypto asset, in the case of digital assets, or in the case of cash, or in the case of money in the account, what happens with through layering, the fund is getting transferred through a lot of accounts in a matter of seconds, and we are unable to trace what is the source of the account. That is called layering. A layering aim is to create complex transactions to obscure the audit trail and make it difficult for authorities to trace the source of the funds. Once the layering is done, we cannot know from which account the money has come and to which account it has gone. So for tracing that, it is impossible to trace the source of the income. So that is the uh, advantage of doing layering. And the last, it is called integration. So as I told you earlier, the drug dealer, the person who is the hero, wants to buy a car. He wants to buy Porsche car. $1 million is the cost. So last, what happens after doing the placement and after the layering, after set of complex transactions through several accounts, the money is coming back to his particular account, and from there it is getting transferred to the car dealer's account. So the integration means laundered funds are reintroduced into the legitimate economy. This can take the form of purchasing assets. Here the asset purchased is a car. So lastly, the amount is coming to the account of the car company. So the money is made legitimate through complex set of transactions and placement, placement and layering, and lastly it is integrated into the economy. So these are three stages of money laundering. This is very important. That I mean, there will be some questions uh, regarding the placement, layering, and integration. So techniques. So these techniques are used. The techniques which are I already explained about structuring, microstructuring, and smurfing. These techniques are used uh, in doing in three stages of money laundering: structuring, microstructuring, smurfing, digital asset laundering. Money muling networks. That money mules are intermediaries transferring illicit funds between the accounts on behalf of criminals. The term money mule is very important because there are a lot of persons who are made money mules. So mule is actually a donkey. What is happening? He is not knowing that his account is getting used. In banks, in the Central Bank of India, that is RBI, Reserve Bank of India, has made an extensive campaign regarding the using of our accounts as money mule. That you should not fall into the trap of somebody who is asking you to open account or for him. That what is happening if a person is unemployed or if a person is a housewife, they does not have an income. So somebody who is approaching us, he might be our friend, he might be our mentor, he can be anyone. So if a friend is approaching us and telling that if you open an account on our behalf and permit us to deposit some money, then we will give you a share of that. So if it is our close friend, we might accept that, we might give our ID proofs and open an account. So what happened next is that in our through our account there will be a complex trail of huge number of transactions. So when we will only get the we'll come to know about that only later, that what happens when somebody from the law enforcement agency or from our bank calls us, that tell that our account is used for money laundering, and that your account is suspended and you have to approach the uh, law enforcement authorities. So that is money muling. So money muling means we are acting as a donkey for someone else. So that should not happen. So criminals recruit individuals through job scams, social engineering, or coercion, making funds transfer for more difficult to trace. Okay, next is trade-based money laundering. So this is one of the very extensive scenario. Trade-based money laundering is happening across the world. So the methods include over invoicing. That exporting, if you are exporting some vegetables from India to USA. Actually, the cost of the vegetables or the invoice, actual invoice cost is only $1 million. But we are writing the name as we were writing the amount as $2 million. So what is happening? We are getting 1 million extra through this trade deal. So over invoicing or under invoicing, both this through over invoicing or under invoicing, we can transfer the value, which is also a, which is also a technique of money laundering. So transferring the value using over invoicing, under invoicing, multiple invoicing, or phantom shipments. In the case of invoicing, over invoicing or under invoicing or multiple invoicing, there is product. There is actual product which is getting exported from one country to another. The only the value is different. But in case of phantom shipments, there is no product at all. That is without exporting or importing any products, we are transferring just the value between countries. Criminals manipulate trade invoices, customs declarations, and pricing mechanisms to move illicit funds. Next is market-based money launderings. It is whenever we purchase stocks, bonds, hedge funds, derivatives, or private equity investments, layering is done. Layering of illicit funds is done to the money which we use. We may not be knowing that the money which we use is used for market-based money laundering and commodity-based money laundering. Same, both are same. Only the what the item is different. In the case of market-based laundering, we are using the share. We are using the share market. When it comes to commodity-based, we are using actual items. We are buying gold, diamonds, or luxury watches and fine arts. So you have seen that in some cases, the luxury items are getting bidded, and that price actual items worth may be very less, but they are sold over and above at a huge amount of price. So such things is comes under the commodity based money laundering. And last is formation of shell companies. If a particular company which is operating in India wants to facilitate illicit financial flows, so what happens? It opens a similar company. It opens a subsidiary company or a shell company in tax-free havens like Mauritius or Cayman Islands, and facilitates fund transfer through that company. So front businesses makes illegal proceeds with the legitimate revenue, making tracing difficult. So using the shell companies, we can do money laundering. So these are the techniques used for money laundering. And thank you. And we'll discuss the next session tomorrow. Thank you. Bye.